Good morning, everyone. Let's run through today's key markets highlights, starting with the US dollar, then oil, gold, and the Aussie dollar. So, starting with the US dollar. The US dollar index is holding steady around 97.55 this Wednesday as traders digest the latest Fed minutes and new trade headlines. And the June FOMC minutes showed most officials still expect to cut rates later this year. But there's division. Some see a possible cut as early as July, while others see no need to ease at all. And the market still prices in two rate cuts in 2025, with September seen as the likely starting point. And meanwhile, President Trump announced a fresh round of tariff letters targeting countries like the Philippines and Iraq, plus a potential 50% tariffs on copper and up to 200% on pharmacy imports. And on the technical side, the dollar index bounced from last week's support around 96.38 and is now trading above its 9-day moving average at 97.14. And momentum indicators hint at a possible recovery, with the RSI ticking up to around 46 and the MACD histogram just turning positive. For bulls to push further, the index needs to close above the 25-day moving average near 98 and ideally reclaim 99 to reconfirm a stronger rebound. And on the downside, key supports remain at 97.14 and last week's low around 96.89. So next, moving to WTI crude oil. The oil prices trading around 67.2 today, easing slightly after Tuesday move higher. The prices touched a two-week high at near 68 as traders react to a lower US production forecast, healthy attacks on shipping in the Red Sea, and the fresh short covering. However, the sentiment remains cautious as President Trump confirmed no further delays to the August 1st tariff deadline, fueling worries about global trade and energy demand. And API data also surprised the market, showing US crude inventories rose by 7.1 million barrels last week, which is the second straight weekly increase versus an expected decline. And technically, oil is moving between the 20-day moving average at 67.99 and the 50-day moving average at 64.07. The bulls maintain support above 65.76, while a sustained break above 68 would open the way towards the psychological $70 mark. And conversely, if oil drops below 66, we could see further weakness back towards the 65.76 area. And now we talk about gold. Gold has rebounded above 3,300 per ounce, recovering from earlier losses after the Fed minutes release. And officials remain split on the timing of rate cuts, which helped to keep the dollar in check and supported gold. And meanwhile, Trump's aggressive new tariff, including a 50% duty on copper, and added to inflation fears that could limit Fed policy flexibility. And technically, gold's uptrend is intact, but momentum has faded slightly. The daily RSI sits below 50, suggesting that the sellers currently have the upper hand. To confirm further downside, gold would need to break the June 30 low of 32.46 and potentially test of 3200 and the 100-day moving average around 31.98. And on the upside, holding above 3300 opens a possible move towards the 50-day moving average at 33.21 and the Bollinger middle band around 33.48. And last but not least, the Australian dollar. The Aussie dollar edged higher to around 0.6535 after the RBA kept rates steady at 3.85% on Tuesday, and the central bank signaled patience, waiting for clearer evidence of slowing inflation, while Governor Bullock highlighted risk from rising labor cost. And Deputy Governor Hauser also noted concerns over new US tariff measures and global uncertainty. And Australian dollar is hovering just below the 9-day moving average at 0.6552, struggling to break above the 0.66 psychological barrier. However, the technical backdrop remains supportive, with a bullish golden cross from the 50-day crossing above the 200-day average, suggesting the medium-term trend is still up. The RSI near 53 shows neutral but slightly positive momentum. If the pair sustains above 0.6552, it could retest the 0.66 level. A break below 0.65 would shift the structure bearish, open the door for moving toward 0.6472 and potentially down to 0.64. So overall, the markets are cautiously balancing between trade tensions, policy uncertainty, and technical signals. So keep an eye on key levels as traders await more clarity from the data and policy developments in the coming weeks. Thank you for tuning in.